This year, we've seen record runs for commodities like gold and copper. But what could be the possible catalyst to push the space higher in 2026? Joining us now to discuss is Tim Yang, Vice President for Commodities with TD Asset Management. And Tim, welcome to the show again.
Thank you for having me.
All right, so we're nearing the end of 2025. Can you recap us what we've seen in commodity markets this year?
For sure. 2025, what a year. Lots of volatilities, lots of uncertainties. A lot of things happened this year. So if I can pick one commodities to represent 2025, that will be gold. Gold has a record year. This year, gold price appreciated by 50%. Usually, gold price don't move that much, but when it moves a lot. It's telling a signal something's happening. The world is changing. So what has changed? The first thing I want to mention is the tariff announcement in April. Liberation Day tariff announcement from the United States is a shock to the world that the existing trade policy doesn't work anymore. We need to readjust. So countries have been rushing to make deals with the United States. Business have been holding off the investment. They're waiting for what happened to tariff impact. So that's the first reason to buy gold, because gold is a perfect hedge for uncertainties. The second reason to buy gold is store value. So what happened in September, U.S. central bank Fed has been cutting rates in September and October twice, despite the inflation is still above the target. So in the dual mandate of Fed, fighting inflation versus maximum employment, Fed has chosen the employment as the priorities. Then in the market thinks the inflation risk is going to be higher. They buy gold for hedging inflation. So both function of the gold, hedging uncertainty and hedging inflation, has been utilized this year. And that's the main reason we think gold has a record year. Anthony, like 2025 is a special year. 10 years from now, if you're looking back, this year it's got to be one of the defining moments in history books.
Yeah, it's been a remarkable year, 2025. Given that backdrop, what are some of the key themes that you'll be watching going forward?
Sure, if 2025 is a shock, 2026 is get used to it. This is the new environment.
This is the norm.
This is the norm. Get used to this. We might see higher tariff. We might see higher inflation risk. This is the environment that we are operating. We're not making any judgment whether the decision-making from the government or central banks are right or not. This is the reality, right? Think about this. It's been 7 months since April. Countries have been making deals with the United States. Very few countries have retaliated against the US. So the world has realized this is the new game. Under this framework, and if we have higher tariffs, higher inflations, there's a lot of investment decisions can be made. The policy uncertainty in 2026 and going forward likely to be reduced. The other thing I want to mention is we are gonna likely to operate in a loose monetary and fiscal policy environment. Market has been pricing a few rate cuts in the United States, and that's likely to be bearish on the dollars. We also see fiscal spending in a lot of places in Europe, in US, in Canada. So those are going to be very positive for commodities. So there are a lot of themes we can play under those consumptions. There is artificial intelligence and data center build-out. There is energy infrastructures. There is energy transition themes. And also there's US and China competitions. A lot of them has impact on commodity demand.
Okay, let's delve a little bit more into that. How AI has impacted commodity demand. What are you expecting there going forward?
Yeah, so artificial intelligence is topical, and the impact on commodity demand is massive. So first, you need to build data center. Literally, you need to build a building. A lot of materials needed to be in the buildings. You need to have supercomputers. So copper, Ali, they all need to be in this. This is number one. Number two, you need to generate power, because data center, the power draw was massive. It's 24/7. And the third thing is the infrastructures. Right now, in a lot of places, like in Canada, in US, the infrastructure is very old. It's aging infrastructure. It's been 100 years old. We need massive investment to upgrade and modernize the grid so they can serve power to data center and in addition to regular business and consumers. Each data center, hyperscaler data center, is like equivalent of a medium-sized cities. The power need is the same as and serving hundreds of thousands of homes. So there was a massive need to address that issue.
All right, let's talk about the energy transition, which may have been lost a little bit in the AI theme. What impact will that have on commodities going forward that you see at least?
Yeah, so the energy transition is very topical as well. In a lot of countries in the world, decarbonization, it is the priorities. One example is the EV sales. The EV sales this year to date, the world sales is 16.5 million EVs. That's 23% year-over-year growth. So this trend is still going. I want to buy EV too. It's a great thing to have. And then each EV, compared to ICE vehicles, contains 6 times as much of minerals than the traditional ICE cars. And also the EV weighs heavier. So there's a lot of more metals needed to go to EV. The other thing I want to mention is for countries around the world that don't have oil and gas, energy security is another reason for them to build renewable energies. We have seen in 2022 the energy shock, commodity shock, for countries that need to import energy is a problem. So there was a massive demand for countries to move away from a fossil fuel energy base into a more diversified, sustainable, reliable energy source. That becomes a national strategic priority for all of them. So the demand for commodities in energy space will be here to stay.
All right, let's talk about tariffs and uncertainty. We've heard a lot about the tariffs, U.S. tariff policy. That's caused a lot of geopolitical trade uncertainty. How have those tensions, particularly between the U.S. and China, how's that impacting commodities?
So U.S.-China competition, everybody realized this is real. The superpower competition is here to stay. So the first competition they will have is technological competitions. Collect data, building data centers, so everybody knows this. And then the second thing is, particularly for the United States, they realize there is need to secure supply chain for critical minerals. If you see President Trump going to meet all the foreign leaders, critical mineral is a topic always come up. The third thing that I want to mention is it's not just about mining minerals. It's actually processing them. It's even more challenging. For example, rare earth, right? So rare earth is more earth than rare. It's not rare to find the rare earth, but the problem is we need to process them. We need literally to crush them, grind it up, and chemically separate them, and then refine them, and then reconstitute to make it to a more useful form, to make magnet of it. So this process is 9 to 13 times energy intensive than just get out of the ground. We need a lot of energies, we need a lot of waters, we need the transportation infrastructures. There's a massive need for this theme as well.
All right, and let's talk about these commodities with regards to supply side. We've heard a lot about the underinvestment in the commodity sector for some time. What do you see there?
We've talked about demand and supply side is equally important. So what we've seen over the last 20 years, there was underinvestment on the supply side. It's particularly important now when the inventory is tight, it becomes a problem. So the mine quality, the mine grade has been deteriorating, and the mining activities become dangerous. We've seen the accident happen in Indonesia, in DRCs. We've seen earthquake that happened in Chile. So a lot of mine supply disruptions over the year. This is the first thing I want to mention. And the second thing is, for a lot of countries who has minerals, they realize it's a national security to have control over those minerals. For example, Guinea has a lot of bauxite throughout the year, there was export control of the bauxite that we needed to make aluminum. That's a problem. And for Indonesian government, they have export control for nickel ores. That's a problem. So we needed to address that issue as well, and make investment also help with local communities. We're not sure when there was a surge in demand with all the themes we just mentioned, is supply able to keep up?